Alright guys, welcome to the video. Anthony Special here with Hawkeye Traders. Hope you're having a wonderful day. Want to talk about what a red top is for those of you who are unfamiliar with it, when and where to identify it, and how to put that into good use. Well, there was a prime example of it this morning. Light sweet crude oil at 11:18 a.m. Eastern Standard Time of a beautifully placed red top. Now, if you're looking for red tops or red bottoms, you're going to be wanting to look for them at either support or resistance, okay, guys? So just keep that in mind. This is not just at any random point. This is at a key level. That's when and where these red tops and green bottoms are going to come into play. And if you notice, we have one plotted here at 9:39 a.m. Eastern Standard Time as well. And it's going to play a valuable role in taking profits as the market continues to move lower off of this Hawkeye red top. So you can see we had a channel structure in play utilizing the low of the session, the green bottom that placed a higher low, all right? And we did test that here after failing. Now, completing a channel structure is nothing more than a trend line cloned or duplicated and put at the high between the 2 points which price action had touched. You can see that led to us finding resistance here, all right, and also resistance at this red top. Now, how do we define a red top? We want a strong presence of selling volume, okay? We want to be at a place of resistance. We want to see the candle close in the lower 50% of the overall move, meaning the wick and the body itself, right? And that's exactly what transpired here. And the market did what? It took a face plant right into these levels that we identified. There were a couple interior lows here that provided support. That was target number 1. All right, so from falling from this level here, let's see if I can do this without capturing that arrow there. So we get about 37 ticks into our first level. We have a second level at both the channel structure and this prior low. For another 50 ticks, going on a little bit further just to that prior green bottom that was placed. We have 66 ticks, and then finally running into the low of the session put us on pace for a whopping 82 ticks off of this high that was plotted at 11:18 a.m. Eastern Standard Time. All right, guys, all you have to do is be able to identify who's in control at key areas. For me, key areas, and this is going to be just basic across technical analysis, is going to be either at support or resistance, right? I want to look for a strong presence of buyers at support. I want to look for a strong presence of sellers at resistance. You could see this wide bar here that exhibited high buying volume, okay? This transpired, time was that? About 10:51. And you can see we had a tough time getting follow through here. So what is this giving me the thought process? Now I need to start thinking, all right, the buyers came in really strong, really aggressive, plotted this large candle, but didn't get any follow through. So that makes me start to think, hey, maybe the buyers are starting to weaken, right? Maybe they're starting to run out of steam. And then I paired that thought process with the red top, and I felt very confident that the market had a good chance of rolling over. And again, all I did was define key areas of prior support in this push higher that I felt may be great targets to take profit at. And they were, right? Because all of them were achieved. In fact, we ran the lows of the day ever so slightly before we bounced up, and now we're settling the session here just slightly below that. But really a beautiful, clean setup, just looking for a red top at resistance, right? Could you have bought this low? I guess perhaps you could have bought it off of this area here, because I know that's going to be a question, so let me address it. Yes, I suppose you could have definitely considered saying, hey, this provided a rally, this pulled back, this provided a green bottom. Yeah, if you wanted to buy it there, sure, you could have. But the overall move here had been under pressure kind of for the overnight. And just to kind of show you, you could see we had this exaggerated top here, which was what we ultimately failed at. And then we were starting to sell off. So could you have tried to push back to the highs? Yeah, I wouldn't discount that. So, if you felt that was what you wanted to do and you felt comfortable there, you could have definitely employed this green bottom for a push higher. But the red top here was really what set the stage, based on this strong topping pattern we exhibited during the overnight. In fact, this morning when I was live with some traders in the market, and I like to look at these and reflect on things that, I interpreted live because I think it's more meaningful. I was very specifically had my eyes here on 81.72 as potential resistance. Significant resistance, meaning this could play a significant role in the balance of the session, that if we pushed into this level, that it would be probably a tough level to get above. And you can notice all the wide bars and all the wicks, and we had a green top, had a green formation here at this high, so a lot of tried buying, and then we had a red top form, and then we sold off. So I was watching this area very carefully because I felt like there was a pretty good chance that we could push it, and if we push it, we would retest the lows, and that's ultimately what happened. So, if you wanted to play this in both directions, by all means, you probably could have. But I thought there was really, really strong reason to believe that at this level that we were going to encounter some resistance. You can even move it over there, incorporate that that red top right there as well. So that's how I played it, right? I mean, I just want to play. I want to play where the odds are in my favor, because that's what an edge is. That's what a trading plan is. A trading plan is something that's set based on a series of rules and criteria that helps lead you to the thought process of believing that this is a high probability area to apply risk to the market. And I felt like this area was super keen. I identified it live. So guys, this is not a hindsight thought process. This is, hey, live market conditions, really watching this level really carefully, because I believe that this is where we could have a hard time getting above. And in fact, we did. And that's what took us back to the session lows. So hope you guys enjoyed this video. What I'd like you to do next is to go below it, click on the link for the training webinar, take out a piece of paper, take some notes. Feel free to reach out to us with any questions. After that training webinar, I'd like to get these indicators populated on your trading chart. I'd like to get you access to the Hawkeye Volume Mastery Series. I want you to start understanding how to identify these high probable red tops and green bottoms, areas of support and resistance where buyers and sellers outweigh each other, and puts the odds in your favor as the trader to potentially place a trade and look for successful opportunities to take profit. So those would be the ideal next steps for you to take, but the next step right this moment is to click that link below, consume the training webinar, take some notes. Feel free to reach out to myself, my Hawkeye Concierge team, ask as many questions as you have. Let's get them answered. Let's get you focused in on volume and price action, because guys, that is really genuinely what matters, okay? I don't care how many dancing indicators you put on your chart. When I come to my my trading screen, this is what you'll see. It's volume and it's price action, because at the end of the day, that's all that matters. So you may want to, as you advance in your trading career, start taking things off your chart, and believe it or not, you'll start to have much more clarity to what's happening, when, where, and why. So that volume and price action interaction, that relationship between the two, is key to understanding the intention of what the market may do next. At the end of the day, the market moves based on traders' intentions. When traders intend the market to go higher, they'll continue to aggressively buying. When traders intend the market to go lower, they'll continue to aggressively be selling. And when there's aggressive selling at a high or aggressive buying at a low, there is a good probability that that is a turning point in the market. And I want you to be able to identify them live in real time like I do, so that you could say, hey, this is the setup I've been waiting for all day. I'm ready to now put some risk in the market and see if the market cooperates. So again, dive below this video, click on that link, feel free to reach out to us. Let's get the indicators on your screen. Let's get you access to the Hawkeye Mastery Series. Let's get you understanding volume and price action to the highest level, so that you can attack the market from the most profitable angles. Guys, I'll see you in the next video. God bless. Thank you so much for being here. And again, feel free to reach out.